Hi, welcome to Market Update for May 5th. Well, Unemployment Friday, folks, or as I like to call it, the mother of all numbers. Remember, this is probably the single best barometer as to the health of the economy. And sure enough, we saw a number that came out and it beat expectations. We saw non-farm payrolls very strong. We saw the actual rate of employment very strong or lower than expected. And of course, we see hourly earnings rising. Now, all of this is good. It's one of the things that we want to see, but it really does offset the poor number that we saw last month. So the real question is how the following month is going to look. Remember, you want to see a 3-month period at least where you see strong job creation. As it sits right now, so far this year, we've averaged around 180,000 jobs per month. But remember, it's been a very inconsistent type of job growth. Now, why is that important for the markets? Well, remember, a lot of this is going to go into the decision-making policy as the Fed meets for their June rate hike. We were told in the last meeting basically to expect that June rate hike. So the real question is whether the numbers are going to really force the Fed's hand, and maybe they're going to be a little bit more aggressive later in the year than once thought. Now, the other thing that we want to pay attention to is crude. Last night, during the night session and the after-hour session, as we like to call it here in Chicago, we saw a huge move down in crude, roughly 3% from the closing price. Now, since then, the market's bounced back, but let's keep a very sharp eye on this. Crude and, of course, all the ancillary effects of crude, not only the companies that actually operate around the crude industry, but remember, sovereign wealth funds holding a cumulative $10 trillion coming from these oil-developing nations and oil-producing nations. Very important. Remember, a repatriation of that capital can come at any time, and you could see a sell-off in assets around the world as we see the price of crude go lower and lower. Let's keep a very close eye on that. This is Jack Barugian from the CME Group in Chicago.